The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. In this episode, we're joined by Niklas, the founder of Chronicle, an Oracle service born out of MakerDAO's Oracle core unit that will be launching publicly in September 2023. Chronicle currently provides exclusive support to MakerDAO's total user deposits of $5.2 billion, meaning that it has captured a 22% market share of total value secured by oracles, making it the second largest oracle after Chainlink. To cover the basics, oracles are decentralized networks that bridge critical information from the real world to the blockchain. In this episode with Niklas, we discuss what Chronicle is and the story behind it, how it works, and what sets it apart from other Oracle solutions on the market. We speak about achieving hyper-scalability and ensuring the security of the protocol, after which we cover Chronicle's business model, quantify the market opportunity at hand, learn about the team behind the protocol, and hear what Niklas thinks will be the biggest drivers and challenges related to growth. Finally, we speak about how Chronicle's relationship with MakerDAO will develop going forward, and what we can expect to see coming out of Chronicle Labs over the next few months. Niklas, welcome to the Fundamentals podcast. It is great to have you on.
Amazing. Thank you for having me.
Awesome. Been looking forward to this one. It's an exciting time for you guys at Chronicle with your public launch coming up. And I think in general, we haven't spoke much about oracles on the Fundamentals podcast before. So I'm looking forward to diving into that space and then understanding how you're positioned within it and how you're thinking about the future. But before we dive into the details, it would be great if you can give a quick introduction to Chronicle for anyone not yet familiar.
So Chronicle is an Oracle protocol that stemmed from the need for more decentralized infrastructure. What we kind of see is that in this industry, we've developed blockchains that are very decentralized, very transparent, permissionless. On top of that, people have built protocols, right, which are decentralized, transparent, permissionless. But on the infrastructure side, there is a severe lack of one, decentralization, and two, transparency. And I think this was like a very organic type of thing where the industry was developing so quickly and growing so quickly that there was a need for infra, right, that was just ready very fast, right, ready at some high throughput. And some corners were cut, and that's understandable, right? For growth, sometimes you need to run a little bit before you can go back and kind of fix things and do things the right way. So we're the answer to that and kind of saying infrastructure should be just as decentralized and transparent as the blockchains that all of our applications run on. And so with Chronicle, what we've done is said transparency is not enough. We want to take it one step further and say that oracles and the data that they bring shouldn't just be transparent, they should be verifiable. Oracles should stop being a black box or like some kind of fortune teller that just gives you a number and you just accept it at face value. Everyone should have an understanding of exactly where this data came from. What is the provenance of this data? What were the in-between steps of how this data was processed that got us to this point? And that's incredibly important, right, from a decentralization and transparency point of view.
That was a great overview, thank you, and really crystallized the core problem of why oracles are important and why Chronicle exists in that market as well. So great. Now, as Chronicle's Oracle service was born out of MakerDAO's Oracle core unit quite some time ago, could you maybe trace back the journey from being that Oracle core unit at MakerDAO to now being the independent Chronicle protocol and speak a bit about what inspired this transition?
So my journey at Maker actually preceded even the Oracle core unit. So I was part of the founding team of Maker in late 2016. And you have to realize back then there was nothing. Not just there was no DeFi, there were no dApps. There was literally nothing. And even though we had these grand ambitions of creating DAI and creating the Maker protocol, we really had to build everything from scratch. There were no DEXs. There was this was preceded even Ether Delta. So we built the first DEX on Ethereum. There were no oracles. There wasn't even anyone who had gotten any funding to start working on oracles that we could maybe rely would have be done by the time we needed an oracle for launching DAI. So we built the first oracle on Ethereum. And so actually that's how I got started down this road. Is in May of 2017, Maker released the first oracles on Ethereum, and they've been continuously live since then, right? So not only is it the first oracles, it's actually one of the oldest and longest running protocols on Ethereum itself. And you have to understand the perspective of Maker was always that, look, like, it's cool that we can do all this stuff, but that's not really what we want to do, right? We want to build a stable coin. We want to build like this permissionless open currency, right, that everyone can use. And so our thought process was always like, as soon as someone else catches up and that's like exclusively focusing on the DEX problem or on the Oracle problem, right, they're going to inevitably overtake us, and we'll be happy to just use them instead. And what ended up happening is that we were never really satisfied with any of the Oracle solutions that popped up in terms of their decentralization, in terms of their throughput, in terms of their transparency. And so we just kept iterating on our oracles. And here we are at this point of 5 years later where we're saying, well, actually, this thing we've built is really good. I mean, the oracles, right, that we built at Maker, I mean, they at one point were securing almost like $20 billion in the Maker protocol, right, of TVL. And that made them like the largest oracles in terms of total value secured by a significant margin, right? And at that point, we were saying, well, we've built this like what I like to call like Maker grade kind of infrastructure, like Oracle infrastructure. And we've invested an enormous amount of resources into making sure it's hyper scalable and hyper resilient and hyper transparent. Why don't we offer this to everyone, right? And so that's largely where the inspiration for Chronicle came from. And so we are completely independent, right? We are not a part of Maker, but we work incredibly closely with Maker. So Maker is kind of it's not just a customer, right? They're really like a partner.
Maker grade. I love that term. I'm going to start using it myself.
Well, I mean, I think like behind that is this quality that I saw within Maker, which is that we do things the right way. It doesn't matter about, oh, we need to get it done quickly or we need to get it done cheaply. No, it was always just get it done the right way. I remember back in the day, like there were no deadlines for things. It was really just, here's the problem and come back when you have thoroughly solved the problem, right? And that could be weeks, it could be months. But I'd like to think that to a degree, we took some of those same values that we were kind of brought up in at Maker and I brought those to Chronicle. And so we kind of take the same approach of we could have launched over a year ago, but we really wanted to make sure that what we were launching was as perfect as we could make it.
Those values are great to adopt. Now, going back to the realization that you mentioned about, hey, this thing that we build is actually like really good. If we look at the Oracle space at the moment, I think we're close to something like 50 Oracle players in this space right now. Could you quickly speak about your position within the market in terms of what your unique selling proposition is and why is it so good compared to what else is out there?
So I think on two fronts, we are the best by far. So what we've come up with is the most scalable Oracle on any chain. So not just on Ethereum layer 1, but also on optimistic rollups, on ZK rollups, right, on kind of alternative layer 1s. And that's a really difficult problem to solve because the execution environments on these different chains have kind of a different set of trade-offs, right? So on Ethereum layer 1, compute is incredibly expensive, but things like memory and storage are memory is relatively cheap. And on layer 2s, you kind of have the exact opposite, right? Where storage and memory are relatively expensive compared to compute, which is incredibly cheap on layer 2. And so trying to come up with a solution that somehow is optimal in both of those cases that seem almost opposite to each other is tricky, but we managed to do it. And the reason why that's important is oracles are kind of this mission critical type of infrastructure, right? As a protocol, if you are using an oracle, the oracle is very frequently like the Achilles heel of your protocol. Like nothing can go wrong. And what you don't want is for an oracle protocol to have a bunch of different implementations. This is the Ethereum layer 1 implementation. This is the one we use on ZK rollups. This is the one we use on optimistic rollups. And then on Cosmos, we kind of use this implementation. And on Solana, we use this other one. That gets very dangerous very quickly because you want to maintain one implementation, right, where you're investing all of your resources in terms of thinking through every single edge case, right, in terms of resource investment, of doing audits, of doing bounties, right? And you don't want to be in the situation where you're kind of porting features from one chain to another. That's incredibly dangerous because the assumptions on every chain are different. And so what's unique about Chronicle is that we've come up with one implementation. It's hyper-scalable. We've essentially used our own kind of bespoke version of a signature aggregation scheme called Schnorr signatures, which have been used in Bitcoin for a number of years. And the second quality that I think makes us unique is this idea of verifiability that we touched on earlier, right? So this idea that you have this provenance of every single data point that can be cryptographically proven, right? It came from here. And so I want to expand on that a little bit, right? What do I mean by verifiability? I think what I'll do is I'll give you a link to our kind of dashboard because I think it illustrates it a lot better than I can explain it. But what you'd essentially be able to see in our dashboard is the data is sourced completely on chain and everything is verified by cryptography. And you can validate this cryptography in your browser, right, on your own, and essentially do the same type of verification that the smart contract is doing. So you can then break down, right? Well, the oracle has this value because all of these different validators had this validator had this data, or in the context of prices, it had this price, and this validator had this other price, and this other validator had this price, right? And the Schelling point of all of those, right, was this value, right? This was like the median value or Schelling point value, right? And so now you get an idea of, oh, well, okay, that's why the oracle is saying this, right? This is the Schelling point value. But you can go even deeper and say, well, why did this particular validator report that price, right? The validator shouldn't be a black box either. And now you can go take this level deeper view of, well, the validator said this price because they queried ETHUSD on Coinbase, and they queried ETHUSD on Kraken, and they queried it on Binance, and they queried it on not FTX anymore, but back in the day, right? And you start to see the raw data source queries that were used in the model for computing a price. And so you essentially have less of this, trust me, I'm reputable, and more of this ethos of what that we have in crypto of don't trust, verify, right? Where I want you, if you're using Chronicle, to not have trust in the Chronicle brand. I want you to have trust in the infrastructure because you can see how the sausage is made, right? From end-to-end data source to on-chain smart contract, right? Like you see every step of that process, and it's verifiable in the sense that it's not just transparent. Transparent to me is kind of this cop-out where we say, oh, it's on a blockchain, it's transparent. But it's like transparent to who? To some kind of Solidity like Rockstar? To some analyst at a fund who has become incredibly adept at using Nansen? No, like to me, verifiability is like transparency plus plus. It means that anyone can use their eyeballs, right, and just look at this and innately understand what's going on. It's not in some arcane language or hidden behind some obscure layers of tech that only hyper technical people can kind of decode.
Yeah, definitely. There are levels to transparency, which I've also come to learn pretty well working here at a data analytics company. It's not just enough that data is available. You also need to make it accessible and understandable. Now, I do want to go back to speak a bit about hyper-scalability, which you mentioned that you have achieved by implementing the Schnorr multisig-based price oracles, which you have kind of packaged under your proprietary proprietary solution called Scribe. Could you speak about the details behind how you actually achieve that hyper-scalability in practice? Because scaling is always a tough problem to crack in crypto.
Yeah. So as you mentioned, right, Scribe is proprietary technology that we developed, right? So it has a business license, but after a number of years, it will revert to MIT, right? So at that point, it can be used, just copied, forked by anyone. What I do want to point out, though, is that the cryptography library that we developed in-house to support our algorithm, that is completely open source. So we want people to be able to leverage, right, the same type of cryptography that we did. And so that's kind of a gift to the community, and we're very serious about supporting open source in that domain. So what did we actually end up doing? We talked about the dual kind of trade-off of the different environments, right? L2, right? Cheap compute, expensive call data or memory. Layer 1, right? Expensive compute, cheap memory. How do you create a solution that kind of satisfies both of those cases? So what we started with is saying that the typical Oracle model, right, says there are a number of validators and they will all propose some kind of value, and each of them will generate a signature saying, I think the value of ETHUSD is $1,500 at timestamp blah, right? And they sign it, the validator signs it with their key, and now that is an attestation, if you will. And typical Oracle solutions will, and this is true of Chainlink, right? It's true of the Maker oracles. It's true of very many other of the current Oracle protocols. Typically, what the smart contract will do is it will say, oh, okay, here's 10 attestations. Let me go and verify each one of those. And this is expensive on layer 1 because it requires a lot of compute to verify all of those signatures. But it's also very expensive on layer 2 because all of those signatures and all of the prices and all of the timestamps for each one of those attestations also needs to get passed. And so you've essentially had this terrible trade-off of where the number of validators that Oracle protocols chose to use was essentially coupled with whatever the cost is that they could afford to update an Oracle over a prolonged period of time. And that's very broken, right? Security, which is reflective in some sense of by the number of validators, by the validator set, we shouldn't be making trade-offs of security just because of like verification cost. That's a very broken type of mechanism. And so what we did is we wanted to decouple those. We wanted something that no matter how big the validator size was, you could verify it in constant time. That is, it would always cost the same. So current oracles are kind of linear in the sense that the more validators you have, right, the cost goes up linearly. With Chronicle, with what we came up with, it's constant time. And so the way we did this is we started with researching different signature aggregation schemes. And what that means is that instead of having a set of signatures, you can kind of just create one super signature. And this would lead to a ton of call data kind of compression, right? So no matter how many validators you had, you still only have one signature. And then making sure, right, that this is a signature schema that is cheap to verify. And so BLS was one thing that we looked at, and I think is quite kind of trendy in terms of signature aggregation schemes. The problem with BLS is that the version that chains kind of natively support in a precompile type of configuration is very insecure. So if you are going to use BLS like signature aggregation, you really need to roll your own kind of verifier or like solver for BLS signature schemes. And if you do that, they're incredibly expensive to verify. So what we did is we instead opted for something called Schnorr. And Schnorr has been used, as I previously mentioned, quite successfully in Bitcoin for a number of years, right? So it's battle-hardened cryptography, right? It secures Bitcoin, right, in the hundreds of billions of dollars, right? So it's really, when we're talking about maker grade, it's maker grade cryptography. But unlike BLS, it's actually possible to verify it without having to expend too much compute. And so that made it quite attractive for us. Now, we did have to make some alterations, right, for Ethereum layer 1. And here is where I think it gets interesting. So we ended up making the algorithm optimistic. And so what that means is that after the validators have kind of computed this super signature, right, this Schnorr signature, one of the validators will essentially vouch that if you were to decode this Schnorr signature, it would yield this price and it would yield this value. And I vouch, right, there's one validator, I vouch that this is true. And they just use a kind of vanilla, kind of the same signature scheme that oracles use now. They just do one vanilla signature, right, where they're not vouching, I think the price is this. They're vouching that the Schnorr signature, that was the consensus of everybody, right, has this value and this timestamp. And so all the Oracle contract does now is verify that the Schnorr signature was submitted by a validator, right? And the validator claims that the Schnorr signature has these values. And that's incredibly cheap from a smart contract perspective, right, to execute that type of function. And so now you have some kind, what we call like an optimistic delay, right? There is some period of time after which, if no one challenges this optimistic price, right, that this kind of becomes the canonical price. And this is how you can update an oracle, right, incredibly cheaply without it being affected by the validator size set. Now, during this optimistic delay, right, what has to happen? Well, all you need to do, right, is essentially just run the function to verify the Schnorr signature, right, and just check. Does it match, right? And the gas cost to match, to do one of these challenges, is actually not that expensive either. It's actually cheaper than the Oracle update cost for most Oracle protocols currently, right? So essentially, like in a worst case scenario, assume every single price update was faulty, right? We just default to whatever scalability, like current Oracle protocols have, right? That's the worst case scenario. But in the average case, right, where validators are honest, we see like almost a 70% reduction in gas costs. And that makes the Oracle incredibly scalable, even for use cases that require like very sensitive oracles. Because the sensitivity, or should we say better yet, the accuracy of an oracle it's not a technological problem. It's kind of been a cost problem, right? You can update the oracle as many times as you want and make it very accurate and sensitive. But the problem is no one can afford to do that because the engineering solutions were just not scalable. With Chronicle, because we've come up with such a scalable solution, it's significantly more sensitive and more accurate, right, for a lesser cost than other kind of Oracle solutions that are out there right now. But going back to this challenge, right, anyone can run this challenge. And so actually, the way that we envision it is actually that this is just going to end up being MEV. So the way that we've structured the challenge is that the Oracle will have some amount of ETH in the Oracle contract, and MEV bots are constantly scanning, right, every block for what are my opportunities, right, to earn yield in this block. And you can just go in the Flashbots Discord and say, hey, here's this challenge function on this contract. If you can ever call it, you will get all of the ETH in that contract. And now you don't need to create your own network of challenger bots. You basically just get to rent all of the MEV bots as a service, right? And that's a very extremely powerful primitive, right? That's very decentralized, right? It doesn't depend on using token incentives, right? We want you to run a challenger bot or something, right? It doesn't rely on, if some centralized party, right, like us pays Gelato or something, right, to have their kind of little automation network, right, to call challenge when it's supposed to be called. Like, no, this is using MEV bots is the most decentralized solution that you can get for kind of a challenger bot army. So I think one other aspect that's quite unique about the challenge kind of circuit that we've created is that if anyone ever calls challenge successfully, well, you've now cryptographically proven that feed, that validator, lied, right? And so what the contract does is it can automatically just ban them, right? And say the smart contract will never accept anything that was signed by that validator ever again. And the validator set, when they're coming up with their group and census, they will just socially ostracize that one validator, right? That was essentially blacklisted. And so the frequency of attacks is capped, right? As a validator, you get one shot. That's it. You can't just keep doing continuous attacks, right? Hoping that the contract will run out of ETH to give to challenger bots. No, you get one shot, then you're done. If a second validator wants to attack as well, great. You get one shot, then you're done, right? And so you kind of have this very decentralized self neutralizing mechanism contained within the challenge kind of mechanism.
Yeah, that sounds like an efficient approach. I like it. And if we move on to speak about security, I think the way you laid out your protocol's technical infrastructure there makes it pretty evident that you are emphasizing security a lot. And at a bit of a higher level, I would love to hear how you are thinking about security in general, because oracles play such an important role as part of DeFi's core infrastructure. So outside of just the internal development work, how do you approach building a truly secure protocol in terms of outside audits, etc.?
So I don't think there's kind of one answer to this. And I think it's more a holistic approach to security, right? So we've had audits by Chain Security as well as ABDK. ABDK, I think, is a little bit more of an like in the know kind of auditor. So they were actually the party that verified all of the math in Uniswap v3 prior to its launch. So, and the signature kind of aggregation scheme with Schnorr that we use, right? I said that we basically came up with the elliptic curve kind of cryptography library for that, right? So we wanted to have an audit, right, that was very kind of math focused in terms of did we get the cryptography right? Perfect. Apart from that, right, audits alone are not the solution, right? You need to have a kind of continuous bounty program as well. And as you kind of over time build up some Lindy, right, in the contracts, right? If no one can find a vulnerability, right, that doesn't mean you don't have a vulnerability. It means that you should progressively step up the bounty over time and increase the value such that you keep unlocking higher and higher tiers of white hat hackers who can really scrutinize this. But it's definitely an iterative type of thing, right? So we've been testing kind of in the background, right, for many months now. I said we could have launched a year ago, right? We've been testing this internally to the point where we are very confident that what we've done is built a spaceship, right? And with a spaceship, right, nothing can go wrong. If you have a problem out in space, like this is a potentially fatal type of problem. And oracles are very similar to that, right? So if you release an oracle, you better be damn sure that you are releasing something that you have an enormous amount of confidence in.
I like that approach. That's how it should be. The product is clear. Thank you so much for that walkthrough of everything related to it. I want to move on to speak a bit about like the broader market and then financials, specifically for when it comes to Chronicle. And maybe to start off in this section, would you be able to walk me through your business model? So we understand how you create value in the market. Now, how are you thinking of either currently or in the longer term of capturing that value that you generate as well?
So I think oracles kind of lend themselves very well to a traditional subscription revenue type of model. I think very frequently in crypto, it's hard to figure out how to monetize certain types of products. I think oracles are one of the most clear cut in that respect, in that traditional Web 2 business models, which, you know, not to slander Web 2, right? Web 2 works. So there's not a lot of innovation needed, so to speak, right? So the point that we want to get to is to have it be permissionless in the sense that you don't even need to come to Chronicle to use a Chronicle oracle. We want to have a completely on-chain, decentralized, permissionless solution where you can just put some tokens in an escrow contract and just push a button and say, I want to subscribe to this oracle. And every month, right, the oracle will deduct some amount of funds from your escrow. The protocol itself has no ability to take the funds from that escrow outside of the oracle charging you monthly. And if you ever want to remove funds from escrow, right, you're welcome to. So you still retain complete control of your funds. And at the end of the month, it's just if you have enough funds, right, the oracle will keep you subscribed. If you don't, right, it will unsubscribe you. And so it works very much almost like turning an oracle into a vending machine, right? Insert token here, get your service output. So quite traditional in that sense.
I like that vending machine analogy. Sounds good. And where are you right now in terms of like revenue generation? I know public launch is still coming up, but like working with MakerDAO, are you able to speak about any numbers or anything else around that?
Given that we're launching next month, we're not at that stage yet. I can say that MakerDAO uses us currently, and they will use Chronicle in the future when we launch next month, and they will continue to use us then. We also have a roster of launch partners lined up, but we're kind of saving those announcements until launch. So no freebies here for now.
Yeah, you can't share everything at once. And now, if we go on to kind of trying to quantify market potential, which is always like a super interesting topic of discussion from my perspective, I'd love to hear how you are thinking about the market potential for what you are building. So if we want to like build a vision for a future of DeFi where Chronicle plays a really central role in it, what does that look from your point of view in terms of a market size perspective?
I think the market for oracles is actually much bigger than most people think. And mostly because there's a lot of things in this ecosystem that are oracles, but people call it something else, right? Now, why did they call it something else? I don't know. Techies love to give things new names, but also if you call something new, right, maybe you're able to raise a bunch of money because it's not something old, it's something new. So to give you an example, right, bridges. What are bridges? Bridges are just oracles. And a bridge is just, hey, blockchain B, something happened on blockchain A, right? The user is trying to bridge these tokens. Same thing with cross-chain communication. This is the same thing, it's just an oracle, right? Hey, blockchain B, some application on blockchain A is sending a message. Here's the message. So you actually have an enormous amount of breadth that oracles can kind of expand to. And so I don't like to think of Chronicle as like a verifiable oracle. I like to think of it as verifiable infrastructure protocol because it can just be expanded to so many kind of what people consider oracle adjacent areas. But really under the hood, it's just oracles all the way down. The other area that I think Chronicle is going to be very successful in is in the space of real world assets. So real world assets are kind of having like their moment in the sun right now, particularly because there's very good product market fit. DeFi has always kind of been this boom bust type of ecosystem, right? Where when number go up, demand for leverage is very high, and this demand for leverage generates very high yields, right? And that's why during the bull times, right, you see protocols like Maker generating $150 million, $200 million annually. But what inevitably happens is during the down cycles, during the bear markets, the demand for leverage disappears. And so on-chain yields kind of collapse. And so what's interesting is that in traditional finance, yields are quite high, right? You have treasury bills at 5%, 5.25%, and rates for credit are even higher, right? And so this mismatch actually creates like this perfect product market fit between traditional finance and between DeFi, right? Where DeFi protocols such as Maker are essentially looking to tap into traditional finance rates because they're significantly higher, right? And so Maker is at this point allocated billions, and I mean multiple billions, into different real world asset structures to obtain treasury bill yield. And on the flip side, you have kind of traditional finance institutions coming to DeFi to obtain cheap credit, right? Because rates in DeFi are so low. And so that has generated a very significant amount of synergy. And the bottleneck here right now is that there is a severe lack of trust between these two parties. And it's because these mechanisms of how does a traditional finance institution obtain credit from a DeFi protocol? Or how does a DeFi protocol extend credit to a real world asset originator in a way, right, that the DeFi protocol feels safe in extending that credit, feels safe that they have recourse, right, that they have some kind of a creditor, debtor kind of security. And I think that's where oracles can kind of serve like a very important role, because right now, all of these mechanisms to try to generate that trust between all of the different parties involved in a real world asset, this is all a very manual process, right? So you have manual reporting by different parties. And this now, all of that data then has to get verified by some kind of team of analysts, right, working for the DeFi protocol. And so this is a very inefficient process, and crypto can help. If you look at what are the benefits that crypto provides, well, one, I think the most important thing that crypto provides is to lower the cost of trust. And the other is automation. And so what Chronicle can do here, right, is effectively provide infrastructure where we are essentially providing the data highway for this automated reporting in a way that generates trust between both traditional finance institutions and the DeFi protocols. And once you can generate that type of trust, now you've unshackled real world assets, because now you've gotten rid of the bottleneck, right? If DeFi protocols have more trust, they'll be willing to extend more credit. If more credit is available, more traditional institutions will be attracted and will be attracted to borrow at scale as well. So there's a very nascent kind of niche here, but it's already in the billions. Like I said, Maker has invested $3.5 billion into real world assets. But once you get the infrastructure in place, I mean, this thing is going to scale significantly more in the next 12 to 18 months than any other vertical, in my opinion. If I were to kind of give a controversial opinion, I would say that the TVL of real world asset related DeFi will eclipse the TVL of kind of vanilla DeFi, or like native DeFi, as we like to think of it, within the next 12 months. And I'm very confident in that prediction. And so in particular for Chronicle, why I think we are so well positioned to take advantage of this is that we work very closely with Maker, and Maker is the largest creditor of real world assets. And it's not even close. I think 90% of the credit extended to real world assets in all of DeFi is coming from Maker right now. And so we work very closely with all of the different asset originators, including Oasis Pro Markets and Centrifuge, to kind of tailor build this real world asset oracle type of infrastructure around their needs. Right. And we're doing it at scale in a way that no one else is right now.
That's fascinating. And I feel like the position you are in right now is quite an optimal place to be in terms of both growing with the market and capturing increasing market share as you start expanding your offering outside of MakerDAO as well. So now, as the market opportunity is obviously massive, could you speak quickly about the team that you have put together to tackle that market?
So I'd say we're quite a small team, but we're a team of specialists. So about half the team is veterans from Maker. So we have some people that are just the best, absolute best at what they do. And we've managed to supplement that with a team of a very diverse background from traditional finance, from FANG technology companies and the like. So we're at around 12 at the moment. By the end of the year, I would imagine we're at 15. And by the end of next year, I think we'd want to be at around 32. I'm hesitant to grow the team too much too quickly. I've been at startups before where the scale that you get from onboarding new talent very quickly, the upside that you get from that, it doesn't outweigh the negative of this dilution of culture. And I think culture is extremely important, right? We talked earlier about the culture of maker grade, right? Doing things the right way. And I think it takes time for people when they join a new team, when they join a new project, to really ossify those values internally, right? Because everyone around them is exhibiting those values. And if you grow a team too quickly, you risk diluting those values. And I think that those values are going to help us be very successful. And so we want to take a very measured approach to hiring at a steady but slow enough pace that the osmosis is monodirectional.
That's a really important point to emphasize, I think, and a pretty common pitfall for startups in general. So glad to hear that you have got that experience beforehand. Now, as we spoke quite a bit about your relationship with Maker and the fact that you are completely independent, even though you've worked very closely with them, obviously, and now that you have the public launching coming, some things will like inherently change. And I'd be interested in hearing on what your relationship with MakerDAO will look like going forward.
So Maker is undergoing a really exciting transformation right now in a initiative called the Endgame. You have to understand that MakerDAO was like one of the first true DAOs in the sense that it really invented how governance should work, not just on a technical level, but on an operational level. And so the end game is kind of the evolution of this, of Maker saying that, okay, DAOs have particular strengths and weaknesses, and we've have years of experience under our belt, right? Figuring out what works and what doesn't. And the end game is the result of evolving that structure to the next level. And so now you kind of have this ecosystem with a diverse set of actors, including sub-DAOs and ecosystem actors. And so sub-DAOs are essentially a way for the protocol to foster innovation in the sense that there is a specific amount of risk kind of almost delegated, like credited to a particular sub-DAO to enable them to try new things, right? I think it's a response to this ossification that happens at mature kind of growth stage companies where they've kind of identified product market fit and they do very well in that niche. And then they get very good at doing that one thing, but they fail to seize many of the other adjacent opportunities that are available to them. And the end game is kind of a response to negate that ossification. So adjacent to that, you have what's called ecosystem actors. And ecosystem actors are essentially independent entities that serve the needs of the sub-DAOs. And so Chronicle, in the context of the end game, right, is an ecosystem actor in the sense that any sub-DAO within Maker who needs infrastructure is going to be able to get their infrastructure needs met by Chronicle. And so we're going to have a very tightly coupled relationship with Maker going forward, right, to serve all of their infrastructure needs now and in the future.
Got that. As you haven't launched yet, this question might be a bit like hard to answer, but I maybe would love to get into your head of how you're thinking about what do you see as the possible biggest drivers or challenges that you will come across over like the next 6 months as you launch?
I think the most challenging thing is to not take on too much. In the Oracle space, there are so many different products, some that exist today and some that haven't been made yet, but that there will exist a need for in the future. And it's all about how do you divvy up your resources. To give you an example, right? Next month, we're going to release Scribe. And Scribe is really good for efficiently and transparently bringing in data right from the outside world onto a blockchain or from one blockchain to another blockchain. Great. But within Oracles, you start having all of these other different product permutations, right? Should we build a bridge that's powered by Chronicle? Should we build a cross-chain messaging protocol, right? Should we focus on building out the best real-world asset Oracle infrastructure so we can just completely dominate that niche? Should we build a verifiable randomness type of Oracle? Those are really useful for things like NFT mints, right, where you need some type of randomness to make sure that some people get rares, right, and some people get commons. They're really useful in kind of a gambling type of dApps, right? Rollbit, for instance, needs to, when someone does like a dice roll or like a poker hand, you need to have verifiable randomness there, right? So if anything, the most challenging thing for me is choosing where are we going to place our chips? How many resources do we want to dedicate to in this area versus in that area versus in that area, where in a perfect world, I want to do them all. But when you're dealing with a limited amount of resources, you really have to to be very, very deterministic about what you want to go after, what the size of the market is now, what the size of the market will be in the future, and what percentage of that market you have confidence in that you can capture.
Yeah, 100%. We would all love to do it all at the same time, wouldn't we? But that's just not how the world works. So definitely tough choices to make always along the way. But if you look back a bit at your time building in crypto, what would be like key takeaways that you would take from your time in the space? And is there anything that you would have done differently, maybe?
Oh, man, so many. I mean, I've been in crypto for a long time, and the benefit I have from that is not necessarily that I or we always made the best decisions, but that we have seen it all at this point and that we've learned from every decision that we've made. And so in my mind, it's okay to make a mistake once. It's never okay to make the same mistake twice. Right? And so I like to think that by all accounts, Maker is a success, but it didn't succeed by just only hitting winners, right? It just succeeded by failing repeatedly until it found success. And I think that kind of gets lost on a lot of people. I think most people kind of see these success stories as, and then they launched and it was incredible. No one had ever done this new type of primitive before, right? And like everyone started using it and it was just this flywheel and then it went to the moon. And that's not true. Maybe in hindsight, some people like to talk about that, but no one talks about the struggle and we spent 6 months developing this and then it was a complete flop and nobody used it and it was useless, right? And so what I kind of take away from that is that to be very deliberate about making like small bets, right? Where you can figure out within a bounded like interval of time, like, is this good? Should we go in this direction more? Or if by the end of that bounded time interval, it hasn't taken off, right? To just cut it quickly. I think the worst thing you can do is to succumb to like the sunk cost fallacy and be like, oh, well, we already spent so much time on this. We already invested so many resources, right? And to keep doing that, you're just wasting your time. So I think the lesson that I've kind of learned is to make a lot of bets and just make sure that they have an asymmetric payoff, right? Such that, okay, fine. You wasted these resources, you wasted this time. That's cool. I'm also kind of like the approach a VC takes, right? When they're building a portfolio, right? They don't expect every company to succeed, but they do expect to have a minority of them have some asymmetric payoff that will, I think the general rule is 1 out of 20 should encompass double like the entire value of the portfolio, right? And I think you should kind of treat business products the same way, where you try to build a lot of them because you can be smart, you can be so smart, you can have the best people, you can have, I have all the experience behind me, I know what works and what doesn't. Well, you're not going to find out what works until you actually do it. And you need to make sure that failure is not fatal.
That's a good rule of thumb. And I think asymmetric bets are the way to go. That's probably why we're both here. I do love that way of thinking. Now, finally, just to wrap this up, I know you have a lot of exciting initiatives coming out of your lab into the public domain soon, certain aspects of which you still want to keep unannounced, which I fully understand. But what could you share about like the main milestones over the kind of short to mid-term that listeners here should be looking out for?
So I would say September, right? The launch of Scribe, I think is going to be very exciting. Again, can't give away our launch partners, but we're very quickly going to be expanding to every chain and having very tight integrations on a handful of chains. When it comes to real world assets, like I said, this is an area that is growing incredibly quickly, but it's also an area where the requirements are constantly in flux, right? And so what this means is you can't just disappear for a year and go build a product and then come back and be like, here it is, because the context of the ecosystem will have already changed. And so if you wait for some type of standardization to occur, it will be too late. Someone will have taken the gamble and will have come out ahead of you. And so what this requires is like a very rapid kind of iterative approach. So with Chronicle, we want to have our real world asset kind of Oracle infrastructure, the first permutation, live by the end of the year. And then kind of every quarter effectively have a new release, right, that iteratively deprecates the part of the protocol that have become like vestigial and iterates towards the happy path of what is the direction of standardization. So RWA, I think, is a very exciting step for us. So look for that kind of end of December, beginning of January. In terms of funding, I think we are kind of looking to do our raise early next year. And the infusion of capital from that, I think, will help us scale incredibly quickly going into the second half of the year. Looking forward to really nailing down what are the other product areas, right, that we want to expand into. You've seen an enormous amount of volatility in the bridge ecosystem. We had the multi-chain bridge, right, which was the highest TVL bridge, the highest volume bridge, hadn't been hacked, it was solid, and then it just got rugged from one day to the next, right? So I think in that respect, you have some players, right, the wormhole, you have some players like Stargate, which have a significant market share, but I think we're very far from an entrenched player in the bridge space. And I think there's still a lot of opportunity there. But I think kind of we have to see how things play out a little bit before we kind of decide to go in one particular direction and like forego another.
For sure. But a lot of exciting things coming up, and I can't wait to see how everything plays out. Thank you so much, Niklas, for taking the time to do this, giving us a great overview of Chronicle, how your product works, but also the Oracle market, the innovation needed there, and how we could look at quantifying that. I'm sure this was really insightful, and I hope we can do it again at some point in the future once you've launched and see how everything plays out. But at this stage, I wish you and the team the best of luck for the public launch, and appreciate your time.
Yeah, no, thank you. This was awesome. It was great getting to chat with you.